Hi, this is Justin talking about crypto myths and digital asset myths. Another one of my favorite myths is the general idea that no one's ever going to pay tax again if we use crypto. All the governments are going to collapse. Who's going to collect money? We need to have an army of litigators ready. We have to prevent this from happening because all the countries are going to lose all their money. Okay, so let's take a step back and take a deep breath. First of all, digital asset technology isn't just Bitcoin. That's first. Second of all, there was taxation before debit cards. It was possible to charge citizens and businesses and to audit citizens and businesses and to audit their records and take them to court. This happened before before the banking complex, the industrial banking complex existed to the degree it did today. So we can, first of all, we do have a precedent, and we do have systems and controls, and we have in the past audited individuals and charged taxes. But you're right, that is a very inefficient process. So right now what we have is banks over here. You have a bank. It's kind of like a vampire bank, but that's too negative. I don't have anything against banks. I just think they're terribly inefficient. You have banks here that hold all your money. Let's continue maybe the blue money trend that I started some time ago. Okay, so you have banks. These guys hold money, and then you have the government, right? And the government can't actually see your money today. So you have to report your earning, your revenue. So already you're claiming your transactions to the government. So right now that's already the same as crypto. So when you do your taxes at the end of the year, you just claim your money the same way you always would. So with crypto, let's say you have a series of decentralized wallets with some of your money. Let's say your crypto is these little coins. At the end of the year, if you've made money or lost money, the same as you do with your bank, you have to claim your crypto. So first of all, when it comes to tax revenue, you as the person are in the identical situation, right? Okay, so then one of the questions is, oh, what if the person's really bad and they don't pay taxes? Okay, that's actually a good discussion. And what is possible in that case is for a government to create their own kind of cryptocurrency. So let's imagine that these guys over here are Bitcoins in wallets, and you have to pay a certain amount to the government because you've made or lost money in the market. And let's say you have to claim a certain amount from your bank. But let's say for whatever reason, people decide never to talk about their crypto, right? They completely hide their crypto. They decide I'm going to pretend this doesn't exist. It's gone. So it effectively disappears. Okay, well, the government has a choice here. You could also do that with your bank. You can have a secret bank account, but the government does have a ability to get in touch with the bank and audit your records. It's harder to do that with crypto. But the bank can do something that I haven't really seen many people talking about yet, which I'm sure some people are thinking about, is the bank could come up with their own cryptocurrency, and they can enforce, I don't want this to happen, but the bank could enforce that every transaction sends a record to the government. Now, I'm the first person who's going to protest against that because I think that's very invasive, but the argument that digital currencies and digital assets are bad for the government and bad for taxation is just false. They're really great. If handled correctly and if set up and if the technology was embraced in the right way, cryptocurrencies natively, by the way they're used, if you built in the rules, would report every transaction to the government instantly. The government would have real-time information about the way capital is flowing into the organization. And even today with Bitcoin, if you knew the wallet addresses of stores, if the government knew the wallet addresses of certain consumers, and if everyone had a sort of registered Canadian digital wallet, all of the transaction data that was flowing through the Canadian ecosystem could be analyzed in real time. We could understand if we had shortages or surpluses of different goods and services. And this is without even tracking anyone's identity necessarily. You don't even have to tie this to someone's identity. You can just know these are Canadian wallets. This sort of idea that that crypto is sneaky and nefarious is quite the opposite. It's actually quite easy to track this information and to make financial or state decisions based on it. So it's another crypto myth sort of down the tube. It's easier to audit, it's easier to track, and it's easier to manage for states when it's easier to manage digital assets for all sort of state level or regulatory actors, and they should be embracing the technology.